If you can find a property in an area that is sensitive to interest rates lowering, you can buy early and make a ton of money before everyone else. There's thousands of different suburbs and markets that will provide much higher returns than others as the interest rate lowers. It's fact. Today I'm going to show you how to find suburbs and markets that have different sensitivity to interest rate changes, so you can buy exactly where you need to be early, starting with the bigger economic picture. Now, interest rates set the stage for virtually all borrowing in an economy. When our central bank, being the Reserve Bank of Australia, adjusts its benchmark rate, it ripples through the entire financial system. Mortgage rates typically move in tandem, which directly impacts how affordable it is, and I'll repeat, affordable it is, for people to buy property in three main ways. Firstly, when central banks lower interest rates, this usually means an increased accessibility to debt, which means cheaper money borrowing for businesses and people. So the same person with the same income and savings can typically afford to spend more money on buying a property. Simply, the banks will lend them more money because money is cheaper to borrow. Secondly, investors may continue holding their property or properties because it costs much less for them to do so in servicing their debt. Their borrowing capacity may also increase due to the lower servicing levels, so they could buy more property. And thirdly, this access to cheaper debt helps businesses expand and grow, which supports job creation and higher paying jobs. This means buying property becomes more attainable for a wider range of buyers. Now, these attributes can come together and be very positive for some property markets, but certainly not all.